What's going on, everybody? It's Jeff here. Welcome back to the channel. What an exciting week we just had. Finally seeing some green, especially on a Friday. The SPY closing over 415, a monstrous weekly setup we're going to talk about, as well as AMC up over 17% for the day on a Friday. A little bit of deja vu happening from 365 days ago. I said in a previous video that not only AMC and GameStop had a very similar setup back to that March 14th levels, the entire market did. Okay, so in this video, we're going to dive a little bit further into it and what to expect in the weeks ahead. June 1st, the quantitative tightening begins, which means the Fed is going to be beginning shrinking their balance sheet. We haven't seen that since 2018. Investors did not react very well to it. I also want to talk briefly about NVIDIA. It is very important to go over exactly what happened, because seeing that they missed slightly on their guidance for the next quarter, seeing the stock rebound like it did is something we have not seen lately. So I'm going to go over exactly what that means going forward. So let's get right into it. First off, take a look at this monstrous weekly candle on the SPY. It goes without saying, it resembles very closely to that March 14th level. I said that a few days ago. Also want to point out that we had 7 red weeks in a row. Okay, that is very, very rare. And just to see that the entire bearish sentiment, the bear trade, was just completely overcrowded. Everybody was loading on puts, loading on puts, loading on puts. And market makers are going to read that. Okay, when they see that, investors, especially on the retail side, all right, is just one-sided on the put flow, the call flow, they're really going to swing it to the other way. And it goes to show this right here by looking at the volume. We have a massive green candle going forward on a lower volume. Actually, this is a 4-week downtrend of declining volume, okay? You looked at some of the daily candles, and I've talked about this numerous times, that volume always precedes price action. But you look at some of the daily, average volume traded, and it was at like 70 to 72%, meaning that buyers aren't really stepping in aggressively. You're not seeing these big funds buying up big positions, okay, on the entire market going forward, which is a very good sign that, we still have more downside to come. Okay, so look over for the next week and a half, maybe a little bit of blow off, just like what happened all right at the end of March, and then we're going to continue to the downside going forward. Keep that in mind. All right, it is very, very important. Briefly, let's talk about NVIDIA before we get into talking about AMC. This was important because they beat on on both sides. However, their guidance going forward was a little bit less than expectations. And as you can see, right after hours, the stock pulled, okay? Naturally, these companies, when they're not freaking crushing it out of the park, especially over the last 2 quarters, they continue to decline. However, all right, not only did the market recover, investors scooped this up. There was massive buying coming in here. You can see there's not a seller in sight, and it continued all the way up from that 160 range to 190. This is a good sign. And the reason why I bring this up is because I've been talking about your PE ratios, and stocks are going to be getting to a point to where, yes, they might still be trading very far ahead of earnings. Okay. And NVIDIA is still a high growth company. All right. And is still, valued heavily on their future. However, investors are starting to see some of this long-term going forward. You look at Apple, that got down to that 140 level, the same thing, that the PE ratios and these companies are starting to become a very, very good deal. And this is exactly what you saw. This is a good sign, because the trend lately was, if you don't absolutely crush earnings and give us massive guidance, you're going to sell off, and you're going to continue to sell off and get punished. All right, that's exactly what we've experienced in the last 2 quarters. So seeing this was a little bit of a trend reversal. Let's talk about AMC. Okay, I had said this, like I said, a few days ago, that March 14th setup was looking very, very similar. Nice solid uptrend all the way from that 1030 level, getting up to almost $15. GameStop, the same way. I don't cover GameStop very heavily because obviously I'm invested in AMC, and I have been for a while, but almost 100% move in just a couple days. You see a lot of volume in here on that morning, and it continued to hold. Now, one thing I will point out about GameStop is their cost to borrow is much higher, right? And this is what Fintel has. It's almost at 50. All right, AMC, Fintel has about 7.6. I know Ortex has a little bit different. I think their max is somewhere around like the 14, 15 range. However, seeing that it is so heavily crowded on the short side, that eventually they're just going to be tripping over themselves. You're starting to see articles come out. There are a few of them saying that basically everybody's going to try to get out the door at once. And this does go for both sides. Okay. So don't get caught up on this. If you've seen this article before, all right, and I don't have it pulled up right now, but everybody's going to try to get out the door at the same time. That includes shorts covering their positions, and that also will include retail eventually selling. And obviously, when no matter what side you're on, whether shorts covering or retail selling, when the mass flows, it's just going to be hard to be able to get out that door going forward. However, like I said, when you continue to get to these time frames where these heavily shorted stocks are not coming down, okay, the market has pulled. Looking at GameStop on a weekly chart from where it was sitting at $2 to $5 to $10, even at that $15 range, seeing that the market was ripping at this time frame and it has come nowhere near that, sitting $137 a share, is just saying that, you know what, it's not going to be able to come down too much lower. It's not going to get back down to those $2, $3 levels. AMC punished, I think, a little bit more. The float is a little bit heavier, and I think it's easier to manipulate a stock like AMC just because the massive float that it has. But I've been saying this forever, and if you look at these patterns, it's the same thing. When one goes, they all go. All right, if you look at other ones that they run in the sector, everybody's looking for that sector sentiment. So it doesn't matter which one happens to lead the sector. Sometimes it's been AMC. Obviously, at the beginning in January, it was GameStop, but it doesn't matter which one, okay? It's all going to pull the entire sector going forward. So over the next couple of weeks, I will look for this very, very closely, especially also because we're getting to the point where it's 365 days before we had that massive push to the upside, just like we did. Going to want to see that volume continue to happen. The one thing that is different from 365 days ago, like I've said, and even from a little bit from that March timeframe, is the volume. All right, when you look at this weekly time frame, it was 2 billion shares. When you look over here, it was the same thing, 2 billion shares on a week. And now we're sitting at just 280 million. So there's a lot less volume coming into it. Same thing from January. Really look to get that push to the upside. Seeing GameStop even the other day, this kind of did surprise me, is seeing it move massively. It didn't attract a lot of that active trading. Okay, you watched it bump from 116 all the way up to 148. There was volume in on it, but it was nothing massive. You weren't seeing massive, big money flow into it, really trying to push it to the upside. So it all depends on what their agenda is. Is their active trading still continuing to going on? Are they pumping off the brakes a little bit? The volume throughout the entire market has slowed, but keep an eye on that going forward. Like I said, for everybody, the SPY, I'm really targeting that 420 to 424 level to be able to kind of take it back down. It does now have a gap on the daily, as you can see from just a couple days ago, but look for that rejection. If we blow off the top and get up to 430, that's when you can look at, potentially seeing a reversal. However, because like I said, inflation hasn't been proven yet to be able to come back down. All right, although looking at the dollar has changed a little bit, but until you get some of those hard numbers, which I believe they are reported on the 11th and the FOMC is on the 15th, look for the pattern to continue. Don't fight the trend going forward. Being able to time this, is very comfortable, especially if you are somebody that's not an active day trader. You can play swings going forward, seeing 5, 6, 7 days moving up to the upside. You're getting back to that resistance. Nice, nice comfortable play to the opposite direction. Play the reversal. If it continues to the upside, you can get out of it and you don't really get hurt. But this way, you're not chasing. So, guys, I hope that gives you a good outlook for the next week going forward, and I'll see you in the next one.